Hello folks, it's Castaway Trader and welcome back to my YouTube channel. Today's video is called Bulls Are Running to the Edge of a Cliff, and we will be talking about Nasdaq and specifically about a pullback we got last week. Both think that we started a huge rally to new higher highs, and I think they are just setting themselves up for a bull's trap. This is how my website looks like. You can find it at www.castawaytrader.com. And before we start, I need you to read that important disclaimer. Follow me on Twitter. You will see examples of my forecasts and you will always be able to ask me questions, and I will be happy to discuss with you scenarios I'm thinking about now. In this video, we will do 5 things. First, I will show you how my favorite ABC pattern let me correctly predict a rally in Nasdaq last week. Second, we will see how that pattern lets you convert a wave count into a bunch of winning trading setups, both long and short ones. Third, I will share with you where this bounce may top. Fourth, you will find out how to buy my best-selling video courses with a nice discount. And finally, I will share with you a coupon code to join my chat room for 2 weeks for only 99 cents. I have never done it before. This is how my pricing chart looks like. You can pick any of those plans. You can pick only a plan that covers ES Mini. This is the starting plan. It costs you $149.99 for 3 months. And you will get intraday updates starting from 8:30 a.m. until 9:30 p.m. Eastern Time, New York time. I always recommend people to focus on that plan. It costs $224.99 again for 3 months. You will get coverage not only of ES Mini, but also NQ Mini and RTY Mini. And I explained many times that even if you focus on ES Mini, NQ Mini actually gives us very often better setups, cleaner wave counts. And that video will show you one of those cases when NQ provided us with better and cleaner wave setups. And if you want a full coverage, including crude oil, natural gas, gold and silver, your choice will be a monthly all-inclusive plan which costs $149.99 for 1 month. But if you want to save, you subscribe for 3 months. And all those 4 plans will now go on huge sale, at least for those 15 first days. And you will spend only $1 and you can cancel anytime. And once you cancel, you will never be charged again. That's guaranteed. So that super offer is valid only until September 30th, 2022. And again, you will find that secret magic coupon code only at the end of this video. So stay tuned. Let's rock and roll. So in 2022, we got plenty of corrective bounces. I call them bear market rallies, and I highlighted them with yellow boxes, and those rallies actually followed that my favorite pattern, my favorite fractal repeating pattern. It's ABC. All of them were shaped as ABC. A up, B down, C up, A up, B down, C up, A up, B down, C up, A up, B down, C up. And for example, we can zoom in. You can see sometimes wave B down makes a lower low, like in that case, sometimes it does not. But we always have the same repeating pattern again and again. And this is how that pattern looks like. We get first move down and then we get A up, B down, C up. And inside that pattern, we can actually identify several winning trading setups, both short setups and long setups. And when we deal with A up, B down, C up corrective pullback, we normally focus on subwaves C. We may trade that rally, we may trade that drop, and we may trade that rally. And in that video, I will show you how Nasdaq actually followed well that specific pattern, and how that specific chart, only one page chart, which I would recommend you to print out and put on your desk, it actually helps us to identify several great setups. Not only that, that same fractal, that same pattern would let us make focused about where that rally can actually find its stop and what would be the next great short setup. So this is the latest lesson I have added to my professional video course. I have 2 video courses. I always recommend to start from the first one for the beginner and then step up for the next one. And my method is that I keep watching the market because I personally trade the market. I'm not one of those guys who only make money on selling subscriptions. My main income comes from my own trading. And once we have just completed a pattern, I try to add it to my collection. And from time to time, I see repeating things, and this is how I came up with that pattern. And once I find some repeating pattern, I immediately post a lesson in the educational part of my chat room, and I try to record a video like that where I explain what those patterns look like, so how we can recognize them and how we can trade them. So very last week, I recorded a bunch of new video lessons, and in one of those lessons, I explained that inside that A up, B down, C up structure, very often we get that specific segment which actually becomes a hallmark of that pattern. That is like volatile A down, B up, C down structure. And once you see that structure after the very first push up, and that structure makes a higher low, that's a really interesting sign, the bullish sign that a new 5-wave up rally is coming. Not only that, that whipsaw normally provides you with a great opportunity for a short-term short. And why? Because inside that A down, B up, C down zigzag, that B up, it actually makes a slightly higher high only to get back down under the previous high and drop hard. This is what is called a failed breakout trading setup, and in my experience that's one of the most reliable setups, and this is exactly what we got last week. And in that video course, which is called How to Trade Like a Pro, you will find detailed explanation of those corrective patterns, and you will find lessons about that failed breakout setup. And normally I charge $199.99, and you will see why, because it has around 9 hours and 70 lessons, and you can read reviews, raving reviews about that video course. So that specific offer for $79.99 is valid only until September 30, 2022. And again, pay attention, you pay only once for a lifetime access, and I keep adding fresh lessons. Once I see something interesting that has been completed in the market, some interesting pattern, or I discover some new rule, I will always add it to that lesson and you will get notification. Okay, let's come back to what we had last week. So this is NQ Mini 15-minute chart, my favorite time frame. You will get many intraday updates if you are subscribed to my trading chat. And you see the first ABC move up, that was subwave A. We call that pattern 335 because it makes ABC 3 waves up, then it makes 3 waves down, A, B, C down, and then 5 waves up. So it's 3, 3, and 5. And I noted last week that that strong push higher that managed to make a higher high over the top of the first 3-wave up structure looked like classic failed breakout short setup. And this is what I posted in my trading chart for subscribers, is that this spiky rally looks like a textbook subwave B up, Bears have a setup to run it down. To trigger that failed breakout short setup, bears need to push and queue under the resistance 1246. And I meant that specific level, the previous high. And look, I provided a green box where that move down was supposed to go. And look what happened. Just maybe 1 hour later, we got a very short decline that dropped almost to that green target box. And this is how that failed breakout short setup works. What we do, big guys push price over the preceding high to run protective stops left there by retail traders, only to turn it down once those protective stops orders got filled. This is a nasty market, and this is how we take out our money. And once you understand how we do that, we will not get your money next time. This is why you really need to learn that fractal. And when we got the drop, I shared another bullish focus with my subscribers. What I wrote was, so far NQ stopped at 50% retracement of the preceding rally in wave A up, the second leg up in wave C up, the green line may stretch to 41.4 50% retracement, and those fips are here. And later in that video I will explain you how you chart, how you draw those lines. Okay, so you got the drop, and that drop looked like a completion of a corrective A down, B up, C down setup. And we have a positive bullish focus for another rally. So the question is, if you are a trader, whether it was the right time to go long. And my answer would be no, it was not, and let me explain why. There were two reasons why the sharp drop in subwave C or wave B down could not be considered an attractive long entry. First, at that point, we did not have confirmation that that drop actually was over. We could get it extending lower even under the preceding low. So the risk that that move down would continue was big, and we did not have any ways to protect our capital. The second, if you study the repeating pattern resembling any corrective ABC pullback, specifically our core most reliable fractal, you will see that at that point our potential payout was limited. So this is the fractal, this is what I mean. We got that A down, B up, C down, right? And we are expecting here a 5-wave up move in subwave C. So how it starts? It starts from a small move up in microwave 1, followed by a deep corrective move down in wave 2. So your pullback, so even if you nail that point, your payout is limited, because the first move up of the low would be a small microwave 1 up that is inevitably to be followed by a deep pullback in wave 2. And let me show you a couple of more examples. And all those examples are fresh examples. That one is from ES Mini, 240-minute chart from June-August 2022. Look, we got 335, ABC up, ABC down, 3 up, 3 down, and 5 waves up. 1, 2, 3, 4, and 5. Those are 5 waves up. By the way, you may ask me why I put ABCs everywhere. Because I use a better modified version of the Elliott wave theory, which is called the harmonic Elliott wave. And I will add to the description of this video several links where you can read more about the differences between the classic version of the Elliott wave theory and that modified and, in my opinion, better version of the Elliott wave theory. But let's come back to the chart. So on that chart you can see 3 up, 3 down, and look how a new move up starts. It starts from a micro push up in microwave 1, followed by a pullback in wave 2. So even if you went long here, you did not have actually good place to set your protective stop unless you put it here. So it's quite a big risk here. So it's better for you to wait until the first push up. That would be your first confirmation that indeed we are dealing with a corrective structure, and we got A up, B down, and yes, that looks like start of a new 5-wave up rally. And that's another example. It's also AS Mini 15-minute chart from February 2022. We got the same ABC up followed by ABC down, the same crazy volatile whipsaw in the middle of that pattern, which actually made a slightly higher low. And that was a great confirmation for you that you have good chance for another bear market rally, 5-wave up rally. And look how it started. It started from microwave 1 up, followed by a deep pullback in wave 2, and only then an accelerated move up finally started. And again, this is my professional video course. I will add a link in the description of this video to a discounted coupon, to a discount coupon, and you will have here a link. You will click the link and you will be redirected to udemy.com educational website where the both of my video courses are hosted. You will be able to download them on your smartphone or tablet, and you will be able to learn even if you are offline, because all lessons will be saved to Udemy mobile app. Again, that offer is valid until September 30, 2022. And if you only start learning wave principle, I would recommend you to start from that course for beginners. Again, you will find a link in the description of this video, or you can go to my website www.castawaytrader.com education, and you will see a description of both video courses, and you will see links to discounted offers. Let's come back to the NQ Mini 15-minute chart, 8 September 2022. And this is what we got. We got 3 up, 3 down, and you see that micro push up that followed by a small pullback down. And that started to look like an attractive long setup. This is what I actually wrote to my subscribers. That starts looking like a bullish micro 1 up to down setup with a stop under 12,212.75. So it was a very tight stop, and that was a potential target. So you can see that potential reward was much bigger than a potential risk in case that bullish setup gets invalidated. Let's again recap why in that particular 1 up to down structure was an attractive long entry. There were 2 reasons for that. First, at that point we did get confirmation that wave B down bottom. We got a push higher of that low, followed by a pullback making a higher low. Then we could set a protective stop under the previous lower low, because if that is indeed a starting 1 up to down setup, wave 2 down could not violate the starting point of wave 1 up. So in any case, if it was a valid bullish setup, bears would not be allowed to drop under that line. This is how you use rules of the Elliott wave analysis to your benefit. You convert a wave count into a trading setup. Second, at this point our potential payout exceeds our measured risk, because the micro 1 up to down setup has to be followed by a strong rally in wave 3 up, and as we discussed, we could set a protective stop under the starting point of a micro wave 1 up. Again, it may sound cumbersome for you, but if you invest some time and study my video courses, you will have much better understanding how wave analysis works and how you can use it to find winning trading setups. So this is what happened the very same day in the evening. During the evening trading session of that same day, pulls pushed NQ higher and made a higher high over that high and that high. So what is a trending move up? It's a sequence of higher highs and higher lows, and at that point we got a sequence of higher highs and higher lows. And you should understand that even traders who do not recognize waves, who do not use wave analysis, this is what we are looking for. We are looking for confirmation of a new trending move up. What we want to see? We want to see the price making higher highs and higher lows, and this is exactly what we got here. We got several higher highs, we got several higher lows, and at that point I drew that potential path to that red target box. The red target box was still there, and I put into my chart to my subscribers that conclusion that we did have a very clean path leading to the red box. At that point, we could pinpoint that target for the next move up, and that particular target could be found at a dense cluster of 2 extension fips that was an ideal target for subwave C or wave 3 up. It was wave 1 up, 2 down, A of 3, B of 3, and the next move was supposed to be the strongest part of the rally in subwave C of wave 3. And we had a cluster of 2 fips. You see how close we located to each other. So this is what we call a cluster of fips. And you can draw those extensions on any single trading platform. It's not like some exclusive tool. That tool is widely available on any platform, including free TradingView. My latest comment on that day around 9:30 p.m. was, if we get a flat consolidation along that level 12.406, that would be a bullish sign. This is when I actually wrote that comment, and this is what we got overnight. Micro A, B, C. We always look for those ABC structures that make higher lows, and that was one of those cases. Not only it made a higher lows, but it stopped over the previous resistance. So that resistance 12,406 now turned into strong support. We got a very flat ABC down consolidation that managed to hold over that important level that turned out to be a strong support. And the next morning we woke up at 8:30. That's actually an update from 8:30 the next morning. We saw that ABC move down was followed by another push higher that made another higher high. And that morning, a little bit later, I posted another attractive micro loan setup. Look, we got ABC down, push higher, another ABC down that made another higher low. And this is what I wrote to my subscribers. We have another micro bullish 1 up, 2 down setup for a strong rally in subwave C of wave 3 up. Note the structure of the decline of the top labeled 1 up. Again, it's A down, B up, and C down. And this is how it played out. We got 1 up, ABC of 2, and another push higher that actually nailed the target, the confluence of 2 fips. 223.6% extension of that wave 1 projected from that bottom, and 138.2% extension of subwave A of wave 3 projected from the bottom of subwave B of wave 3. And that specific tool, extensions of subwave A of 3, cannot be found in the classic Elliott wave theory. That tool actually lets us pinpoint and make accurate predictions about the top of wave 3. So let's come back to that same corrective ABC fractal that let me found that bottom and that let me found that bottom. So we expect that probably on Friday we got a top in wave 3, and then we should get a pullback in wave 4 and the final push high in subwave 5. The final wave C up, we have three waves, A up, B down, and C up. So in any corrective ABC structure, that final wave C up tends to be subdivided into 5 microwaves, and it starts from 1 up to down structure. Talking about the way how we can actually make a forecast about a potential topping point for that whole ABC up structure, we have 4 forecasting tools. First of all, once a pullback starts, we always come back to the preceding decline and we add retracement fibs. We add 50%, 61.8, 76.4% retracements. Those are rules that I explain in my professional video course. So we added those retracement fibs to our NQ chart, and here we can see that the first one is located at 12,750 and 50% retracement fib is located at 12,900. Forecasting tool number 2. We can use extensions of the first move up of the low wave A and we project it from the bottom of a corrective ABC structure of wave B. And again, there are several repeating extension ratios that we normally look for. And for example, here we added 138.2 and 176.4. Again, what we did, we measured the distance covered by wave A, we projected it from the bottom of wave B, and those two levels would be levels where a reversal, bearish reversal could happen. And again, this is a slide from my professional video course. Forecasting tool number 3. Inside that second wave C, we need to be able to count 5 microwaves. And here I'm trying to do that. Wave 1, corrective wave 2, wave 3, corrective wave 4, and the final wave 5. So for that structure to be completed, for that A up, B down, C up structure to be completed, we need to be able to count 5 microwaves inside the second leg up, and so far we do not have 5 microwaves up completed. And finally, we have a forecasting tool number 4. We can start working with extensions inside that 5 wave up rally, the final push higher. Specifically, we would be looking at extensions of that one up projected from the bottom of wave 2, and here you can see on Friday we hit a very important rock solid extension 223.6. If wave 3 tops out at 223.6, we can expect wave 5 to top either at 27.6.4 or even 300% or 323.6. So it's possible that wave 5 may extend up to the upper edge of the red box. And here comes the most important rule. Once we do all those projections and extensions, and as you can see on that chart, we got a lot of different levels. We start looking for confluences. We start looking for clusters, dense clusters of those levels. For example, here you can see one. We got extension of wave A, 138.2. You see 27.6.4% extension of a microwave 1. You see 41.4 retracement of the preceding decline. And you get the first potential level that that whole ABC up structure may top, and this is from where we can get a bearish reversal and start of a strong bearish decline in wave 3. So that is 12,750. The second level of interest for us would be another confluence of fibs where 176.4% extension of wave A and 50% retracement of the preceding decline, they form a cluster at 12,900. Those are 4 different ways to predict where that ABC corrective move up may top and why it's important. Let me show you a bigger picture. The bigger picture is that we got a large ABC move down of the very top made in November 2021. That move down was followed by a corrective looking ABC move up that could be a large wave B, and under that count we are starting a large wave C in parentheses down that would go much lower under the low made in June 2022. And as any 5-wave down structure, it starts from a micro 1 down, 2 up structure. And you can see that I added two retracement fibs, 50% and 41.4, that showed the same levels. And if we find a top here in that area, we should expect a very strong move down that first would target that same level where we got a bottom in June 2022. And the same fractal would be applied to that move down. If it was decline from November 2021 into June 2022, and then we got that ABC move up that topped in mid-August, then we are dealing that very first squiggle, micro setup 1 down, 2 up, and we are somewhere here. We are about to top in wave 2 during the next week or the week following the next week, somewhere in mid-September, and then we should get another strong push down in subwave A of wave 3 down. This is how you can get coverage of my in my chat room for 2 weeks. So this is for plans that I normally offer for subscription, and all those plans have 15-day trial. I never offer free trial because personally I believe that people do not value what we do not pay for. And instead of those $15.99, now until the end of September, with the coupon code September, you can actually join the chat room for 14 days for only 99 cents. And just read description of those for plans, pick the one that you like the most, and the cheapest one is for $149.99 for 3 months. It will cover ES Mini and S&P 500 with intraday updates from Monday to Friday and the weekend update on Sunday. And I would recommend you to look at that plan, because even if you only trade ES Mini, you would benefit a lot if you keep tracking what NQ Mini and RTI Mini offers us. Very often those two futures would provide us with better and cleaner trading setups. And if you have a short NQ Mini, you will be able to short ES Mini. And if we have clean short setups on all 3 of them, that would add confidence to you that indeed we are going to get a draw. If you want to get a full coverage, including natural gas, crude oil, gold, silver, and you can, if you want to get an access to my proprietary indicators for TradingView, you can pick that all-inclusive monthly plan. In those 2 plans, you would pay only once a quarter. And if you want to save on that full all-inclusive plan, you switch to that plan, to quarterly all-inclusive, where you pay $349.99 every 3 months. Thank you very much for your time. I hope you like this video. Please leave your like. It means a lot to me. And please subscribe to my YouTube channel. In that case, you will get instant notification once I post a new video. Good luck in your trading.